the week ahead. As you begin the week, remember that randomness is the downfall of many short-term traders. There's a book out by Nelson Taleb called Fooled by Randomness. It's a great read, and there are so many random acts that take place in the market, and those random acts or events can mislead us. What I try and do and to stay in focus is always start with the daily, weekly, and monthly bars in order to give me a perspective. When I look at the daily bar in front of us, I see that the daily bar once again poked below the 50-day moving average and has come back up. That 50-day moving average remains a short-term focus. Remember this, the more times it is traded through there, the weaker it becomes. When I say the weaker it becomes, it increases the odds that we will start to find trading below that. When we go to the weekly bar, we see a different picture. We see a 2-week balance. We see a 2-week balance. The balanced trading guidelines are applicable to this. So when you really look at this, if there's anything significant to change to the downside next week, we will find acceptance down below the 2-week low, and we will start to see lower range extension. That would also put us back below the 50-day. Anything on the upside, you're going to trade above the 2-week high, the 2-week balance. Next, let's go to the monthly. And you look and see the monthly is still one time framing higher. Again, I cautioned early about being misled by price and a lot of the news events. Take a look, the monthly bar is still one time framing higher. Historically, this has been a strong season for the market. It doesn't mean it'll continue, but it's just something to keep in mind. If there's going to be any real change in the market to the downside, you will see that we will start to trade below the weekly 2-week balance, and we will start to trade below last month's low. Unless that happens, the market maintains the current trend to the upside. Now, when I look at Monday's profile or look at Friday's profile in preparation for Monday, I think it takes a little bit of thought. If you look just at price looks very strong coming off of Friday's low. I think there's a possibility in here that the market got extremely short from overnight and early morning trading on Friday, and then spent the remainder of the day in a short covering mode. If you look and at the bottom, this is like a P formation, these single prints, and then kind of the loop of the letter P on top. That is an indication of short covering rather than something that would be more potent, that would be short covering and new money buying. I didn't see the new money buying on Friday. That increases the odds that we test to the downside as we come into next week. On Monday, the first thing you look at on Monday, if you open within about the center or so of Friday's range, you get a pretty good odds that you're going to get a rotational day. Something that's stronger will show higher conviction either upward or downward early in the morning relative to the settle on Friday. Again, it's a very questionable market. Remember, the trend remains up. keep an open mind that Friday could have been short covering, and short covering can actually weaken a market. Take a look at what happens with value as we open the new week. Thank you. Have a great week.